2021 is a different year, and so there are things that you want to consider before you make the decision to refinance. Hello and welcome to my channel. My name is Dr. Brittany Helford, and on this channel we discuss all things personal finance to build more joy and more wealth in all of our lives. And I've shared with you in the past about my debt-free journey. If you haven't watched that video, then go watch that video first. Part of my debt-free journey was to refinance my student loans, and it really made a big difference. But if I were in a position where I had to pay off my student loans in 2021, I'm not exactly sure that I would refinance just yet. So let's talk about refinancing your student loans and what it might mean for you in 2021. This is refinancing part 2. I decided after recording the video to split it into 2 parts. Go back to part 1 to understand the benefits of refinancing student loans, the drawbacks of refinancing student loans, and if you are a good candidate. Now let's continue. I can honestly say if I had a federal loan, I might not think that right now is the right time. So you want to be able to pay your bills consistently without any late payment. You also want to be able to track your money for 3 months, because you have to know where your money is going and know how much is left over to determine how much you can actually afford as far as a refinance payment. Then you want to have an emergency fund. Remember, most people get into debt because they don't plan for emergencies. So you want to have at least $1,000 in an emergency fund. And if you don't have high interest debt, then perhaps saving up at least 1 month's worth of expenses will provide additional cushion just in case you got into a danger zone or you had a big emergency. Now, because of the pandemic and also the changes in our administration and how it's affecting our student loans, you want to take into account a few other things. And the first is the type of loan. Do you have a federal loan or do you have a private loan? The CARES Act has allowed for no payments or interest accruing on federal loans, but this does not include private loans. So if you have a federal loan, I would say that now definitely is not the right time to refinance, because there's no private bank that's going to give you 0% interest. Instead, capitalize on this time and put a little bit more towards your federal loan until September 30th, 2021, and then you can figure out what you need to do with your loans thereafter. You also want to think about the current economic climate. We have seen many people lose their jobs, they've lost money in the stock market, and you just don't know if there's going to be a big change in your financial situation. So while you have these protections, especially for federal loans, it will be wise for you not to refinance. And also, because the economic climate is unstable at this time, it may not be the perfect time to refinance your private loans. However, if you have an emergency fund of 3 to 6 months and you have a private loan that is a high interest rate, so I would say above 6%, you may want to consider it. There are many banks that are offering very low interest rates at this time. Again, you have to put all of the pieces together to make sure that it's going to work out well in your favor. Now, if you are finding these tips helpful, then go ahead and hit the subscribe button. What are you waiting for? I would love to see you join the YouTube family so we can share more money tips and increase our financial wellness. So who is the right refinance company? You want to make sure that they have good customer service and also they're a reputable company. Maybe you can seek out someone that they've worked with in the past. For me, I've personally refinanced with SoFi and I really loved my experience. We've also refinanced with First Republic Bank and have had great experiences. Remember that you have a choice in the matter, and this is one of the pros about refinancing your student loans, is that you can actually select your lender. Ask all of the questions that you have to many different companies to see, are they friendly? What is the source of information? What is the quality of information that they're giving you, in addition to how much they're able to accommodate you in your request. I mentioned that I refinanced my student loans as a 5-year fixed rate. And I actually prefer a fixed rate. We have also refinanced my husband's student loans with a variable rate. When you refinance with a variable rate, that means that your interest rate can change. It can either go up or it can go down. But in our case, it kept going up. And that was just really frustrating for us because we knew that if our money was not going to the principal, if our interest rate continued to increase, as well as there were some changes in our actual payment. Now, sometimes they can offer you a variable rate at a lower payment amount, but I think for budgeting purposes and to make sure that you can meet your goal in monthly payments every time, a fixed rate affords you that opportunity to have consistency. Now, it may be that the rates go down, and if you opt for a fixed rate, then you're not going to benefit from that decrease in interest rate. But at least you have the security in knowing that you've made the decision and you're able to budget for it because you've made a plan. Next, you want to think about the years of your loan agreement. For me, I elected for a 5-year fix, but often there are 7 and 10 years that are offered. Remember, you can always pay it off faster, and there's not going to be any penalties in doing so. So select a time that works well for you and for your life goals. I knew that I wanted to have a family and I didn't want this debt hanging over my head. But in the case that we actually needed more time to pay off that loan, then that was allocated for us by selecting a 5-year fix. I knew that with budgeting and discipline, I could pay it off sooner. Figure out what are your life goals and when you want to accomplish them, and see how that fits into your timeline to help you select the right length of agreement with your new lender. Now let's talk through the refinance process. It's a tad bit different for everyone, but this is the general process. First, you want to go to a site like Credible or NerdWallet and just put in your information. I'll ask you things about yourself. What are your goals? To pay down debt faster, to have a lower payment, or to have a lower interest rate? What medical school or graduate school you attended? Was your highest degree of education? How much you actually make currently? What is your loan amount? Based upon that information, they are able to calculate rates that are offered from various lenders. This will give you an idea of which lenders to contact first based upon what this website is offering. Now, this is a pro tip. Many people don't do this, and I, in fact, did not do this when I was refinancing my loans or my husband's loans. Remember, this is a negotiation. You are giving them, well, you will be giving them your money over a span of time. And so there is room for negotiation. After you get your rates, you want to call each of the companies and negotiate your rates. I particularly would call the company with the best customer service first and say that this is what other companies are offering you and ask them to match your rate. They'll ask you for a series of documents, which includes information about your current loan, your current lender, documentation of your current income, as well as they will do an inquiry on your credit. Remember that when you're negotiating between companies that you have 30 days, so each of the companies will submit a hard inquiry to determine your credit. And you want to go to all of these companies within the same 30 days so that inquiry only shows up once on your credit report and affects your credit score. After they've collected all of these documents, you'll set up an account with them, you will sign a terms of agreement, and then your loans will be refinanced. So that is it. Now, you may be thinking, well, I'm still on the fence, so what actually should I do next? And what I would say is to go to Credible or go to NerdWallet and put in your information just to see what the estimates are for monthly payments, to see what the estimates are for the interest rate, and which company is offering what. Then what I would do is select a 5-year fixed and that estimate of a monthly payment. and try for 3 months to save up that amount of money. And if you can do that and do it comfortably, then you know that you have the ability to pay back a refinance loan, at least at this time, with that company based upon those estimates. Also, it allows you to have money in the bank. So when you actually do refinance, if you hit a time of hardship or you determine in your budget that you want to take a trip, you have that extra cushion that you can apply to that loan payment. Now, refinancing your student loans is not the right decision for everyone. And I'm hopeful that with this information, you can determine if this is the right decision for you. And if you need more help to figure out budgeting techniques, then you definitely want to visit my video about how to fix your budget in 2021. And if you want to learn how to avoid money mistakes so that you can save up more coins for potentially refinancing your student loans or just bringing more joy in your life, check out my money mistakes video. I am so happy that you guys are walking along this journey with me. So I hope that you have a good day, a good week, and I will see you next time. Bye-bye.